Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong level of previous monthly resistance, which is now turned support. In fact, what we can see here is that this zone was quite strong historical monthly supply and resistance for this market. From here, all this previous rejection to the downside started again here, then the market broke above that zone and all that previous resistance was turned support here. The market tested that previous resistance turned support, now started rejecting it to the upside. So from a monthly standpoint, more bullish price action could be created away from this level. So the monthly time frame does seem quite bullish. We can also notice that from a pattern standpoint, we have a clear impulse followed by this correction. And in general, after the impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And this shows us how we have a 0.32 Fibonacci lining up exactly with the previous resistance turn support, creating a confluence of support that once again we could expect this market to potentially continue to reject to the upside. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can notice how the market has been creating weekly higher highs and higher lows. In a situation like this, more bullish price action could be expected because it means that the market clearly is still in an uptrend. The last level that the market created was a higher low. So the next logical step would be for the market to go and create a new weekly higher high, therefore continuing this bullish trend from a weekly standpoint. We can also notice that if we look at the structure of this market, we do have previous weekly resistance turn support at this level. This level was acting as previous weekly resistance preceding the creation of this red candle. Then the market broke above the zone, and at that point the previous resistance was turned support. The market tested the level as support and is currently rejecting it to the upside as support. So more bullish price action away from this level could definitely be expected. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, the situation is quite clear. We have a market which at the moment is pushing to the upside quite aggressively. In a situation like this, where we have such a strong trend, at that point, what could definitely be a possibility is to see first a correction and then the continuation to the upside. Now, I also spoke about USDJPY just a few days ago when the market was around this level and explained all the reasons for which we could expect first the completion of this W formation at the neckline, and then the logical step after W formation is completed is to see the continuation to the upside. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. Now that the market has created exactly what you would expect in this situation, where we could be looking for the next potential structure to be created. Well, before we go more into detail into what we have here from a technical perspective on the daily, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing precisely on the JPY. Well, as usual, the first thing that we have to keep in mind is that if we're looking at the data for the JPY, we're actually already looking at JPY USD. And if we want information on USDJPY, we simply have to reverse everything. And what we can see here is that with the last reports, we went from minus 179K to minus 138K net positions, showing how institutions have been increasing their net positions on the JPY in the short term. Now, what this means is that in the short term, the JPY is supposed to be getting stronger. However, at least at the moment, we do not see any JPY strengthening. In fact, USDJPY has been getting stronger, which means that the JPY is actually getting weaker. And if we zoom out, we can see that in the long run, that has been the trend for quite some time. The JPY is continuing to getting weaker and weaker, therefore USDJPY is getting stronger. And in fact, if we zoom out a bit and we look at the long term, we can see how in the long term, in fact, institutions have been shorting the JPY, going from minus 55K to minus 138.5K net positions. And in fact, we can also notice how just now that trend started again, because with the last report, net positions once again started to be decreased. So it seems like the long-term trend of institutional shorting of the JPY just started once again. And if institutions are shorting the JPY, that makes USDJPY stronger. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. Well, here in the daily time frame, as the market has created this very strong impulse to the upside, if we will see now a correction, potentially also a correction to this structure here, which is previous resistance from a daily standpoint, which is now turned support, that would definitely be a good area to see some more institutional longing of USDJPY by institutions shorting the JPY. So if we will see a correction to this area and we start to see institutional longing of USDJPY, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market will shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below and I will see you in my next video.